Banks say the rules are the same for everyone. But if you've ever been charged fees, denied credit, or kept waiting for what feels like forever, you already know that's not true. Most people think banking is simple. You save some money, use your card, follow the rules, and everything just works. But real life feels different, doesn't it? One person gets a loan approved in 5 minutes. Another person with a similar profile gets rejected. One person gets their fees waived with a quick phone call. Another gets punished for being short by just $10. One person gets offered amazing interest rates. Another gets trapped in expensive high-interest debt. Today, I'm going to explain why. Not with conspiracy theories, but with the real logic, the real systems, and the truth that banks don't say out loud. And you need to stay until the end, because once you understand these hidden rules, you'll stop blaming yourself for your financial struggles and start playing the game a whole lot smarter. Let's start with the first hidden rule, the one that probably hurts the most. Banks charge you fees for being broke. It feels so disrespectful. If you have a low balance, they hit you with monthly maintenance fees. If you swipe your card when you're short, they slam you with an overdraft fee. If you pay a bill a day late, you get a late fee. It's like the system is designed to charge you for not having enough money, even though not having enough money is often the very reason you need a bank in the first place. Meanwhile, if you're wealthy, you often get a premium or priority account with fee waivers, better customer service, and all sorts of extra perks. So yes, the rules are technically the same, but the outcomes are completely different. It's like the bank is saying, "Congratulations on struggling. Here's your punishment." Now for the second hidden rule, your time is a privilege, not a right. If you've ever waited on hold for an hour, been transferred between 5 different departments, or felt completely ignored standing in a branch, you've experienced this firsthand. Regular customers get delays. High net worth customers, on the other hand, get direct phone lines to private bankers and get fast answers to their questions. It's not because wealthy people are somehow nicer or more deserving. It's because wealthy customers are more profitable. Banks value your time based on how valuable you are to their bottom line. That's why a person with a huge balance gets treated like a VIP, while a person with a small balance often gets treated like a problem to be dealt with. This brings us to the third and possibly most unfair truth in modern finance. Credit is easiest to get when you don't actually need it. Think about it. When you're financially stable, have a strong income, and a healthy savings account, banks are practically throwing credit at you. They send you pre-approved offers in the mail. They automatically raise your credit limits. They offer you lower interest rates. But the moment you actually need help, when life gets tight, you lose a job, or you're stressed about making ends meet, the bank suddenly becomes incredibly strict. All of a sudden, you're labeled high risk. Suddenly, you need mountains of paperwork. Suddenly, you get denied. This is because banks don't lend money based on your potential or your character. They lend based on their own safety, and safe borrowers get rewarded, while borrowers who seem risky get punished. It's not personal, It's just math. The fourth hidden rule is that interest rates are not created equal. Banks will tell you that rates are based on the market, but that's only half the story. The market rate is just the starting point. Your personal financial profile is what decides the final price you pay. If you have a strong credit history, you get offered lower rates. But if you have weak credit, you get stuck with higher rates, and this creates a vicious cycle. High interest rates make it much harder to pay off your debt. Being unable to pay off debt makes your credit score worse, and a worse credit score means you'll continue to get high rates. So some people get access to cheap money and can build wealth faster. Other people get stuck with expensive money and stay trapped in debt longer. If banks were being totally honest, their slogan would be, "The rich get coupons, the poor get penalties." And that leads to our fifth rule. Your deposits are treated differently than your debt. When you deposit money into your savings account, the bank pays you almost nothing in interest. That difference, that gap, is their profit. Banks don't make their big money by holding your savings. They make big money by lending your money out to someone else and charging them interest for it. So when you're saving money, you think you're just helping yourself. And you are, to an extent. But you're also feeding the bank's profit engine, and that engine runs best when people are borrowing, not just saving. So if banks need your deposits to lend out, why don't they treat you better? Because banks don't need every customer equally. They are constantly searching for customers who make them the most profit with the least amount of risk. And some customers do both. They have stable deposits and they borrow responsibly. That's the sweet spot. Banks design their systems to attract and reward customers in that sweet spot, while quietly pushing away or punishing everyone else. The sixth rule is that the rules change when you're powerful. Big companies can negotiate their banking terms. Wealthy clients can negotiate. They can get better interest rates, lower fees, and special deals that aren't advertised to the public. Regular people, for the most part, can't. It's not because regular people don't deserve it. It's because most people don't even know they can ask, and more importantly, they don't have leverage. And in banking, leverage is everything. When you have leverage like a lot of money or a big business, the bank listens. When you don't, you generally have to accept whatever terms they offer you. You miss a deadline by one day and your credit score can take a hit. You dip below your minimum balance and you get charged. But when the bank makes a mistake, it's just a temporary technical issue. It's a system-wide error, they tell you. Please allow 3 to 5 business days for a resolution. It's a complete double standard. Your mistakes are expensive and immediate. Their mistakes are slow to be fixed and often forgiven without any penalty to them. Have you ever noticed how banks want your money instantly, but they return it to you so slowly? Let's connect this to the bigger picture. Banks are businesses. They are not charities, and they are not your friend. They don't get paid for being fair. They get paid for managing risk, collecting fees, and earning interest. So they build rules and systems that protect themselves first, and then they market those rules as if they're designed to protect you. That's the key part people need to understand. The banking system isn't designed to be equal. It's designed to be profitable. So the most important question is, what can you actually do about it? First, avoid overdrafts at all costs. Overdraft fees are one of the fastest ways to leak money from your account. Second, track all of your subscriptions and automatic payments. Banks love it when your balance gets hit by a charge you forgot about. Third, build an emergency buffer, even a small one. This protects you from the fee trap when unexpected expenses come up. Fourth, work on improving your credit score, even slowly. A better credit score gets you access to cheaper money. Fifth, shop around for better banking deals. In banking, loyalty is rarely rewarded. And finally, number 6, always ask for fee waivers. You'd be surprised how often they'll remove a fee if you just ask politely. The biggest thing to change is your mindset. Stop thinking you're bad with money if a bank treats you like a problem. Many banks are literally built to profit from your financial stress. Stress causes people to make small mistakes, and those mistakes make the bank's money. It's a loop. But once you see the loop, you can start to break it. Here's the real lesson. Banks treat everyone the same because they make the same profit from everyone. They reward the customers who are already financially stable and punish the ones who are struggling. You can learn the rules. You can build your leverage. You can protect your money. You can start using banks as the tools they are, instead of letting them use you. If you want more financial truths and wealth lessons explained in simple language, subscribe and hit the like button so this video can reach more people who need to hear it.